Hi friends, Simon here from InformedTrades.com. Today is Monday, October 26th, start of a new week. On the screen right now, you're seeing the Euro-Dollar US chart, Euro-US dollar Forex chart. Last week, there was an ECB announcement, and now it's this big candle right here, where we saw basically a 200 pip drop, then another 100 pips day after that. That took us to the bottom of this outer channel that starts back in March of 2016. We see the channel. Every time we hit the top, we've been falling back down. When we hit the bottom, we've been rallying. Pattern of higher lows and higher highs. Now we are at the bottom, and I think this could be an interesting buying opportunity. We currently, this is about 7:20 a.m. I'm in Chicago in the United States, so I think that's 7 hours behind GMT. So it's probably like 2 p.m., 2:30 almost GMT. And so far the market is a little up. Euro-US dollar is a little up. So it might be an interesting opportunity to buy. You could put your stop at 109, basically 200 pips below. At least that's sort of the way I look at it from a daily chart. And you could target all the way up here. You could actually target 118. So this is another scenario where, last time we were at the bottom of a trend, this channel is about 1,000 pips wide. So if you're at the bottom of the channel, you could get 800, 1,000 pips here, something like that. Pretty interesting, just by risking 200. So pretty interesting risk reward. Personally, I'm not trading the euro dollar at the moment, but I do think it's worth noting. And I guess with me, I might be more tempted if we wait a couple days and if we really see an accumulation pattern, a pattern of a tight range in this area. Then to me, that's the signal I would wait for. But depends on how aggressive you want to be. I think now could also be an interesting opportunity. Or you could wait until we cross back into this channel. So a number of ways of looking at it. But if this channel, the basic idea is if this channel is still valid, there's that 800 pip, 1,000 opportunity potentially right around here. U.S. dollar index. This is the futures index. Pretty much the same story. We are now above the upper trend line here. So if we're set back down, then it could be an interesting short opportunity. And we're also going to see the same thing on the FXCM dollar index. So basically all these things are saying that it could be an interesting time to short the dollar, and the dollar may be a little overbought. Where I'm sort of have a dollar position on is dollar yen. However, I'm long the US dollar here. I'm long dollar yen, which means I'm buying US dollars and speculating on a decline in the Japanese yen. I got in at the bottom of this. I got in also way back here, but I also entered recently right off this hammer here, so right around here, 119.05. I mentioned last week that if we hit this orange line here, it could be an opportunity to take some profit. So definitely we've hit that trend line, or we've hit that resistance line. So maybe some profit taking or moving your stop to break even is also something that might be a good idea now. Personally, I'm not adjusting anything. I'm holding on. If we zoom out to a monthly chart just to illustrate my perspective on this, I really want to see price back up around here, 146. So I'm not too concerned with a little bit of a small movement here or there. I have a small position, but I'm expecting, I'm holding this out for a much larger move in dollar yen. And that's based on, which we've talked about a lot, the fundamentals in the Japanese economy. Okay, S&P 500, let's go back to the daily chart. We are now at, this I think is really interesting because we are now at this trend line, this dashed blue line, this dotted blue line here. We're now at that line, which is a pattern of lower highs in place, and we are at the trend line, or the channel that we broke out of. And just to put it in perspective, if we look on the weekly chart, this channel goes back to August, or basically September, end of August of 2011. Now we broke out of this channel in August 2015, so basically a channel we were in for 4 years. We broke out of it, and that was when I closed some of my equity positions. I mentioned then, and my stance has been, this is a pretty bearish sign, so I'm going to take some positions off the table, but ultimately I still think price is going to head higher, so I'm keeping a lot of my positions on as well. A lot of the growth positions, or growth-oriented stocks that I had, I closed them out. We're now at the 50-week moving average also, but we're also at this trend line, so potential key inflection point, and I think the market could head back down. I think a move back to 2038 at least, possibly even 1977, is very reasonable. And if you're bearish, then this is the test of you broke out of the channel. We haven't really tested it yet. We're testing it now. So this also could be the catalyst for a much larger move down. Like I mentioned, I still think price is going to be heading higher, or at least holding its own. But it is definitely a bearish sign and a potential short opportunity, or an opportunity to cover longs if you haven't already. Lastly, just one last chart. High-grade copper is at its 50 moving average. This is just something I noticed when I was looking through the charts. I'm not viewing this as a potential trade opportunity, but I do think it was worth noting. Anytime you're at the 50-cent moving average, I think it's at least something to pause, even for a brief moment, to think about. And that's about it. Any questions you have, anything you want to add, join us at Informed Trades. If any of this information is unfamiliar to you, we have a lot of educational information on Informed Trades. Check out the articles and videos there. If you enjoyed this video, please like it, share it on Facebook, Google+. That helps us grow and helps us make more videos. Best of luck in your trading and investing. We'll see you next time. Take care.